Good morning. I just finished doing my review of the markets for heading into the week. I've selected my setup markets, and this video is just going to go over my reasons behind looking for trades in these different markets. So, first of all, the euro. So, what I discovered on the euro is that the commercials relative to the last 6 months, they're actually at a pretty strong extreme in their short positioning. Price has been increasing for weeks on increasing open interest, while the commercials have been heavily selling. So that is a second sell signal. Second of all, on the euro, we have bearish. A very bullish sentiment, which is actually a counter trend signal. So that's a sell signal. We're overvalued versus bonds here. This brown line you'll see is bonds. We're also overbought on the stochastic. The true seasonal on euro is also to go down to end of September. um, and on top of that, the small speculators are the longest they've been positioned in the last 6 months. So when we see the small speculators at extremes like that on these forex pairs, it tends to be a good counter trend signal or a counter signal. So that's a sell signal. And we also had the percent R and the stochastics giving some sell signals, and also the momentum indicator diverging a bit. Hasn't confirmed that it's a sell signal yet. But so euro, I'm looking for sells. Just to be clear, when I say I'm looking for sells, these markets are set up for a move in the direction that I'm looking to trade, which is short, but this isn't a timing tool. So just because I'm saying I'm looking for short euro, I'll only get short if there's a change in trend on the daily. Okay. Japanese yen. Similar reasons for wanting to short the euro. The commercial index is in a sell signal. The commercial is actually on this whole move up. If I was to show you their positioning, this whole move up, commercials actually switch their positioning super extreme. They're actually more short than they've been in the last 3 years now. So that's a sell signal. Price has been increasing for weeks here, while the commercials have been getting heavily short. So that is not bullish. That's bearish. We also have overvaluation versus gold and bonds. So that's a sell signal. The true seasonal for the yen is also to go down until October. And the small speculators are the most long they've been since February 2021. They actually got that long in April 2024 again. But basically, the small speculators are at an extreme in long positioning. They are usually wrong, especially at extremes. So that is a short signal. We have an overbought on the stochastic as well. We've also got distribution going on. The percent or price open interest and volume is diverging for sell, percent R. And so we have the supporting indicators giving us sell signals as well. So if we do get a change in trend, that would be a decent market to short. The Mexican peso, looking for longs actually on the Mexican peso. The commitmented traders commercial index is giving a buy. The commercials are actually the most long they've been this year. So at an extreme for the last year, I think that's a bullish signal. Basically, this last few weeks kind of been consolidating here. It's been slightly up, but kind of consolidating, and open interest has been decreasing in this area. So that the large speculators and the small speculators are not interested in this market right now. But what's interesting is the commercials have been buying heavily, so that's bullish. We also have undervaluation versus gold, which is bullish. And the true seasonal isn't very strong directionally, but it is a slow grind up to September, mid-September. And we also see the small specs on the small spec index giving it's a buy signal, and the small specs are close to the max short they've been in the last 3 years. So they're not quite there, but they're right in that area. So again, small specs pretty often wrong at extremes. Okay, moving on. The Swiss franc. The Swiss franc. Basically, the commercial index is giving a short signal. The sentiment is extremely bullish right now, which is a counter signal. You want to trade opposite to that signal. So look, that's a bearish signal. We're also overvalued versus bonds, not overvalued versus gold, but overvalued versus bonds, which is a sell signal. The true seasonal is also for down to the end of September. Then with the small specs, the index is giving a sell signal, and the small speculators have heavily bought this rally, and they're at an extreme positioning of the last 6 months, which is not bullish, it's bearish. So looking to take sells in this market if we do get change in trend. These two markets are super interesting to me, gasoline and heating oil. Of the two, I lean more towards gasoline just because it is in a premium market. So the front month delivery months are actually trading at a premium to the later delivery months. So someone, meaning the commercial players in this market, really want gasoline now. They want it so much they're willing to pay more for it now than if they were to take delivery at a later month. So that's bullish. We'll talk about heating oil first. So basically, the commitment of traders commercial index is giving a buy signal. The commercials are at an extreme in their long positioning, last seen in May 2023. And basically what's happened, you've seen a multi-week down move while open interest has increased. And so when open interest is increasing, we need to ask who is causing the increase of open interest. And in this case, the commercials have been adding to their long position this whole move down. So an increase in open interest caused by the commercials is bullish. We've also seen the small speculators at an extreme short position. Actually, they haven't been. The last time the small specs were this short was in September of 2020, which is super bullish. They're at a multi-year extreme in their short positioning. So this market is set up to rally for those reasons. We're also undervalued versus gold and bonds. And we're also at an extreme bearish sentiment on the sentiment reading. The only thing that's not in alignment with all these readings is the true seasonal for heating oil and gas is for the market to go down to mid-September. But since all these other things are flashing by, I don't really care too much about the seasonal. With the heating oil, we're also getting a spread divergence. So the front month versus minus the next month out, there's actually a bullish spread if you look at the daily. Prices making lower lows, but the spread is making higher lows. So that's bullish. So we also got accumulation going on. The percent are giving us a buy signal, and the stochastic is oversold. So that's this one's a good one. I think this one's set up for a nice rally. Same with gasoline. Only thing gasoline, so basically gasoline doesn't have the spread divergence going on, but it does have the front month premium. So we got on gasoline, the commercial index is flashing by. The commercials are actually the most long they've been. They're more long than they've been in the last 3 years, which is very bullish. And similar to heating oil, in this multi-week down move, open interest has been decreasing while the commercials have been adding heavily to their longs, which is bullish. We also have undervaluation versus gold and bonds, and we also have a very bearish sentiment, which is bullish as well. Also on the ADX, we're getting a paunch forming. It's not quite over 40, but if the price is moving down and the ADX is moving up over 40, that's a sign of a bottom forming. So we don't have that confirmed yet, but it's something I'm watching. We also have the percent R, and that's it for the supporting indicators. So gasoline, heating oil are, in my opinion, set up to rally if we do get a trend change. Moving on to the grains, I'm actually already in this trade on soybeans, but basically on soybeans, the commercial index is flashing by. The commercials are approaching the max long positioning of the last 3 years. They're not quite there yet, but they are hovering around an extreme and long positioning. And then with the open interest, the price has been grinding grinding down on this the price has been going down on this multi-month down move, while commercials have been heavily buying and adding to longs, which is bullish. We anticipate for that reason eventually we're going to see some sort of bullish move here. The sentiment is extremely bearish. We are extremely undervalued versus gold and bonds, and we're oversold on the stochastic. We also have a paunch forming, so the ADX is up, the price is going down, and ADX is going up over 40. So this market is set up to rally and put in a fairly significant bottom. We don't know the magnitude of the move, but the paunch is a fairly rare phenomenon. Doesn't happen very often, but when it does, it's a fairly potent signal. The only thing I don't have in alignment is the seasonals on soybeans. True seasonals to go down to the end of September, then up to February. But again, I've got enough things going in the bullish direction that I don't mind the seasonal not being in sync. And also the small specs, we got a buy signal on the small spec index. The insider, we've got insider accumulation going on. The percent R is giving a buy signal. The ultimate oscillator is giving a buy signal. And the momentum is diverging, but we don't have that confirmed yet. So I'll be watching for a momentum shift. That's it for grains. Down to the metals. So gold, I'll go back to this list. Gold is setting up for a short. Basically, the commercial index is giving a sell signal. The commercials are in an extreme and short positioning that we haven't seen since January 2021. So that's a significant short position the commercials have taken. So basically what's happened is prices kind of grinded up here at these highs for months here, and the open interest has been increasing. So when open interest increases, we need to ask who is causing the open interest increase. In this case, the large speculators have been increasing their long positioning, and they have been causing the open interest to increase, which is a bearish sign. Large specs have been getting more long, while the commercials have been getting out. So we are anticipating this market to reverse at some point. We also have an overvaluation versus treasuries, bonds. Also, the ADX is approaching 60, and whenever the ADX gets to 60, that signifies a significant end of trend. So it's not quite there, but it's something I'm watching. This could be a pretty significant moment for gold here if we get that ADX above 60. Also on gold, we have this true seasonal supportive of this short. It's true seasonals to go down to the end of September. We also have a bearish spread divergence. So on the front month, if you take the front month minus the next month out, we're seeing price grinding up, but the spread is weakening, which that is bearish. Also, we have a distribution going on, insider distribution. The percent R is giving us a short. The ultimate oscillator is giving us a short. And the momentum indicator is giving us a divergence, which hasn't been confirmed yet in a shifted momentum, but so much bearish stuff going on gold that looking to short this market if we get a trend change. That's it for metals. In the bonds, it's a little bit of a mixed bag. Like the 5-year and the 10-year have the commercials long, and actually it's a picture perfect trade setup. The commercials, basically price is currently higher than it was a year ago, and the commercials are looking to trade in that same direction. The only thing I don't like is that we have the small speculators at an major extreme of the last 3 years. So what's interesting is the 5 and the 10-year buy signal, but in the 30-year we have a sell signal. And they're close to the max short they've been in the last 3 years. The seasonal's down. This trade is supportive of the extreme and the small speculators positioning. So I'm watching for shorts on the 30-year. That's it for bonds. And then for the softs, I'm already long cotton, but just realized I haven't been showing you the charts as I go through those last few ones, so I apologize about that. So cotton, I'm already long cotton. So on cotton, the trend has changed on the daily. So we're in a uptrend. What's happening with cotton, I've been talking about for weeks. I've been stopped out on cotton a few times trying to get long. Basically, the commitment to traders commercial index is in a buy area. The commercials are more long than they've been in the last 3 years, which is bullish. Basically, we've had a multi-month price decline while the commercials have added to their longs the entire down move. So this is bullish. We're also undervalued versus gold. And there's a bullish spread divergence that's been going on in this last few weeks here, which is bullish. And the small speculators are very short, and there's a buy signal on the small spec index. And for supportive indicators, we have the ultimate oscillator giving us some divergence. So cotton, I think it's ready for a fairly significant move to the upside. Now we have sugar. So with sugar, the commitment to traders buy signal. We also have the commercials are very long relative to the last 3 years. They're not quite at the extreme, but they're right close to it. So that's bullish. So this multi-week down move has seen the commercials add to their longs, which is bullish. We're undervalued versus gold, just by a little bit, but still undervalued versus gold. The true seasonal for sugar is to go up till November. Probably has something to do with as the Thanksgiving and Christmas season arrives, people are going to be buying sugar. So that's the true seasonal there. We also have accumulation going on by the insiders, percent R buy signal, ultimate oscillator buy signal. And also some momentum divergence on the weekly. Hasn't confirmed yet, but so those are the setup markets for this week. Basically, this is not saying that I'm going to just go long on the open on Sunday night. This is me saying that these markets I've identified appear to be set up for a move of some significance. The magnitude we won't know, but these do appear to be set up for some sort of major moves. And I will look to get long in these markets if we get a significant change in trend. So if you're curious about how I'm coming up with these perspectives on the market, I am utilizing some techniques taught by Larry Williams. I'm using some indicators that are basically looking at the commitment of traders, positioning, their extremes in positioning, the sentiment, and things like that. If you have any questions, feel free to give me a message. I will update my channel here with with how these things are going, anything that I've gotten into, anything that's stopped out. I'll keep this updated. And until then, I wish you guys all a good week and good luck and good trading.